Like and subscribe to my channel and click the bell icon to get new video updates.
3 key changes in the markets in 2023. As we switched the calendars to March last week, it seems like a good time to see what has changed in the stock and bond markets so far in 2023. The first change was that the markets were pricing in future peak inflation in March 2022, and those expectations trended downwards by the end of December. Remember that actual consumer inflation peaked at 9.1% YoY in June 2022, and fell to 6.4% in January 2023. The markets sensed that inflation would be more persistent, and future inflation expectations have risen year-to-date and 10-year yields have risen to 4.4% and 4% respectively, after falling to 4.1% and 3.1% in January. This year-to-date rise in interest rates and inflation coincided with rising estimates for economic growth in the first quarter. The second shift was the collapse of the relationship between returns and outperformance of value stocks. In 2022, the outperformance of value stocks over growth stocks almost perfectly followed the path of Treasury returns. So far in 2023, growth stocks have outperformed despite the rise in interest rates. This ETF lost a whopping 67% of its value in 2022, but is up over 29% in 2023. ARKK focuses on companies with high expected future growth, but not necessarily current earnings. This type of company should be more sensitive to higher interest rates, since the expected cash flows are in the future. Value stock valuations remain undervalued relative to their historical relationship to growth, so it looks like an opportunity to pale this recent growth stock outperformance, or at least not follow that growth trend. While growth doesn't always underperform as yields rise, valuation seems to increase the likelihood of value re-emerging as a leader in this scenario.